Right, well, Google is trying to move into the coupon business. It wants to buy Groupon. This is an online coupon startup, but the price that Google might pay, $6 billion. And some investors are wondering if that price is a little too high. To talk to us about that and a few more other things going on at Google right now, Kerner is with us. He has analyzed social media companies for Goldman, Merrill, now at Wedbush Securities. He is the former CEO of Bolton Media, a social site with 20 million monthly users. He is also a partner at secondshares.com. Lou, thanks for coming in this morning to talk to us about what's going on at Google. So Google may buy Groupon, $6 billion. Honestly, do you think that's too high?
Well, you know, Deirdre, this is a whole new e-commerce sector. And even though Groupon is only 2 years old, and that in and of itself scares a lot of investors, and even though that there aren't any barriers to entry, you know, there aren't any barriers to entry to e-commerce, but look how Amazon dominates. So we actually think that this is going to be a very significant, fast-growing e-commerce sector for years to come. Reported revenues in 2010, run rate today of $500 million. So if you look a couple years out, if they get to $1 billion in 2011, $2 billion in 2012, then it can actually look accretive to Google on a revenue basis.
Because, I mean, if we look back to Google's acquisition of DoubleClick, the online ad space, I mean, that was $3.2 billion, right? So, I mean, this is essentially double, but you're saying it's pretty powerful. I mean, you can go on Groupon, you get products that I guess people use all the time, teeth whitening strips. I mean, deals on everything, right?
Yeah, deals on, you know, mostly local deals. So 70% off teeth whitening, half off at the King Tut exhibit here in New York City. So there are all kinds of deals, over 200 cities in the U.S., over 150 cities outside the U.S. So this is, I think, going to be a really significant e-commerce category for years to come. And as you brought up DoubleClick, Google has a history of buying the leaders like DoubleClick, like YouTube. They bought YouTube really early. And the history of the internet shows you that the early leaders can often come to dominate, like an Amazon, like a YouTube.
What are the chances that the talks break down? I mean, I've heard Groupon maybe is going to hold out, wait in the wings, get some venture capital money, and make Google raise the offer.
Well, sure. Well, any time that you get a deal this big, there's going to be a lot of complexity to it. And I think one of the added complexities of selling to Google is so large that the regulators spend a lot of time.
And Groupon knows they have the money, too.
Oh, exactly. $33 billion in cash sitting on the balance sheet. But anytime Google does a deal, like when they did AdMob, they acquired AdMob, the regulators give it a very close grub. And any company selling to Google has to worry that the regulators might not approve it. So that's just an example of an added complexity that you have in doing a deal with Google, and that the selling company has to protect themselves against that possibility.
We're going to put worry and Google in the same sentence again. It looks like Google is taking on Amazon.com. Credit Suisse saying in this ebook space, when Google does it, it could take about 50% of market share from Amazon.com. Do you think that's true?
Well, certainly Google is very well positioned to take share in any business that they go into. I think the book business makes a lot of sense in kind of the broad media space, to the degree that, you know, a big leg of growth for Google going forward is going to be Android. And what Google wants to present to telcos is, I think, a whole entire media center. So I think they're going to do movies, they're going to do TV shows, they're going to do books, you know, to compete as much with Apple and iTunes as with Amazon.
All right, and worry and Google part 3. How much do they have to worry about what's going on with the EC complaints, basically, about competitive disadvantage?
Well, sure. Look, Google knows that, and investors know that this is an overhang with regulators that's not going away. You know, the search business is a huge global business. Google has a 70% market share. Anytime you have that kind of market share and that large of a business, the regulators are going to continue to look at you like they've looked at Microsoft for many years in the operating system. Google knows this. You know, Google, I think, is a good citizen, and they should come out. You know, they should come out of this without any serious harm.
Do you think we can look back to the fate of Microsoft's settlement with the EU as a precursor of the settlement that maybe Google would reach with the EU?
You know, I think it's tough to do that, but, you know, what I do think that I've got a lot of confidence in is, again, is that Google's been a good citizen. Google understands what the rules are, and I think that they're operating within those rules. So I don't think any fines or, you know, or censorship or anything is going to be too significant.
Lou, thanks very much. Kerner joining us there.